Hey everybody, today's May 14th, and today we're going to talk about the stock market, and we're going to talk about this incredible bounce that we've seen over the last two sessions, and whether we can continue up high or whether this will roll over and continue down lower. Before we begin, please read this disclaimer, and you can pause this video as you read it. Okay, just before we begin this discussion, there is a bit of a glitch on this chart. It says pre-market, but the market is actually open. So for this video, pay attention to just the candle and also this green box over here where it says 415. This is the actual price of the SPY, which is the ETF that tracks the S&P 500, right? Over here it says the SPY is at 410 and 410 down here, but that's not accurate. The market is actually open right now. I don't know why there's a glitch. It's just today, I guess. But anyways, just to keep that in mind as we do this video. Alright, so over the past couple of weeks when I covered the stock market, I talked about how even though the stock market is in a bull trend, right, we're going up, it's healthy in a bull market to pull back once in a while and touch these moving averages, right? This is the silver line here is our short-term moving average. This is our 50-day simple moving average. And notice how over this last year, the year started over here, right? We've had 3 touches where we came down and touched and we bounced off, right? Sometimes we overshot like over here, but for the most part, when we touched it, it acted as strong support, right? All 3 times. Now, I also talked about how in April, not only did we had a gap up, but we had this nice push up higher. And I talked about how it's been a while since we came back and retouched the moving average. Now, I've said in my previous video that if we can hold this Fibonacci level, because Fibonacci levels tend to act as strong support resistance level, right? That's why you get a lot of volatility when the price gets up to these Fibonacci areas, like over here, and most recently over here in late September and late August. No, sorry, September and October of last year, right? And so, of course, Fibonacci levels, there's going to be a lot of choppy price action as we try to flip this resistance into support. And I said that if we can hold this level, we can see this continue higher. Of course, we didn't hold that level. Early this week, we had a sharp decline in the prices in the stocks. So we came down, but I talked about how this moving average, because we held it these 3 times, it probably will hold as support. And I also said that this could possibly be a good buying opportunity, and that I myself was buying stocks as this thing came down, right? Of course, this is not a financial advice channel. I'm not a financial advisor. So always do your own due diligence and do your own research and make your own trades. But I was just trying to be transparent. I told you how I came down here and I bought this dip. And if you look, this candle like perfectly touched this line, right? This support line, and now it's bouncing hard, pretty strong, and we have a gap up day today. So things are looking pretty good. It looks like this support may not fill after all, but this gap over here may not fill, but just because it doesn't fill doesn't mean it's a bad thing, right? Because the longer a gap is open, the more likely it is to not get filled. And even when it comes down and it doesn't fill this gap over here, this gap could end up acting as support, right, for this line, for the price to push up higher. So overall, things are looking bullish, especially the fact that we gapped up. Not only did we gap up today, but we gapped up above the Fibonacci line. So if we can stay above this line and hold it, this can act as a strong support and a strong base for us to push up and move even higher. So that's where I'm looking at. Very bullish on the market right now. Yes, in the future, this line will go up higher, and we will likely retest these lines, right? So there is going to be corrections. There's going to be dips along the way. Sometimes it's going to be small dips like we had this week or the last 3 times this year. And sometimes there are going to be corrections of 10% or more like we had in September and October of last year, right? This is just natural and healthy part of the bull market. So don't be nervous. See the long term. There's always pullbacks to these moving averages and sometimes a lot of volatility, right? But I mean, these are opportunities to buy the dips, right? So if you're not scared, if you don't get scared and you don't sell, these are great times to buy the fear, right? We always talk about how the best time to buy is when there's fear in the market. Right now, fear and greed index 40, right? We talked about how choppy fear and greed index. This is a good opportunity if you're trying to get into the market, in my opinion, because you don't want to get into the market when it's like overbought, right? You don't want to get in when everybody is like super bullish, because you have like, that's just, you're at the ceiling of these oscillators, fear and greed, right? And it just gives more momentum to the bears who want to short attack and push the price down higher. But the fact that we are right now at 40, there's just so much room to the upside for this to continue higher, right? That and the fact that we're holding above the Fibonacci line. Of course, this is going to take a couple more sessions for us to see if this can actually hold or whether we're going to roll over. If we do roll over, we likely will continue out lower, but I do expect us to continue up higher and hold this level, right? So that is the technical analysis in the short term to medium term. Let's look at the volatility, right? The volatility, it's coming down pretty hard, right? We saw a huge spike in volatility, and I just told you in previous videos how the VIX doesn't just go straight down. It likes to go sideways. It likes to have these volatility spikes once in a while, right? That's just the natural part of the market, right? When people get too complacent, the bears like to come in and like mix things up, right? This is the UVXY. This is the ETF you can use to trade the VIX. There are many different ways, but people like to, this is very simple. You just buy it and hold it. But once in a while, there's going to be spikes in volatility, right? And I talked about in my previous video how it's been a long time since we had a spike in volatility. So it's not surprising that we have one right now. But look, it's starting to come down now. So it looks like this, if we just follow the trend of like the last 12 months, right? When we have a spike and it comes down hard like it is right now, right? The trend tends to continue out lower. So it does look like this volatility event could be over and the market will likely continue up higher, right? And for the same reason, the strong technical bounce, the fear and greed index being so low right now, is giving us a lot of upside. And the VIX obviously coming down pretty hard, right? And not following up through and continuing higher. So just a lot of signs that this could be a bottom of the dip, and this will the stock market will continue up higher. And before I end this video, I want to look at the dollar coming down, right? We saw dollar spike up, which caused some downward pressure earlier this week, but the dollar is starting to come down now. And if the dollar continues this downtrend that we've had since April, if it continues to go down, especially if the dollar breaks this multi-year floor over here, right? If we break this multi-year floor, the dollar comes down, well, that's going to give a lot of momentum to push the stock market higher, right? So, and also I'm going to end with yields. Yields are coming down now, and when the yields come down, that takes a lot more pressure off the tech stocks. Because we were talking about how when the yields were up earlier this year, right? Like how the yields came up so much. That put a lot of pressure on the tech stocks, right? A lot of pressure. So the tech stocks have been sort of relatively weak compared to value as people rotate from tech stocks into value stocks, right? But now that the yields are coming down a little bit, as well as the dollar being weaker, people are willing to take more risk. So tech stocks, growth stocks tend to be more risk-on assets, right? And so now we're seeing that we're starting to see the Nasdaq lead the market again, 2%. And usually in a strong bull market, the tech stock, the growth stocks are the ones that lead the market, right? So overall, just to summarize this video, I'm very bullish on the market going forward. Quick recap, in a healthy bull market, it's okay for us to come down and test these moving averages once in a while, like we have this week. And right now, we're basically continuing to validate this short-term moving average, the 50-day simple moving average, as strong support level, as we have a strong bounce. Now, of course, it's not enough to just look at this and say, oh, this is over, right? We'll follow up next week and see if we can continue up higher. So what I want to look for, if we are to continue going up higher, is we definitely have to hold this Fibonacci level as support, right? We tried to break through, but we failed, so this is resistance. But we want to flip this resistance to support by staying above, not only staying above, but holding above, and then continuing up higher, right? And not only that, but to keep these moving averages coming up. And once we cross the Fibonacci line, I have more conviction that we'll end up going up, we'll end up holding it and continuing higher. But also looking towards the future, don't be surprised if this comes down once in a while, right? It's healthy for us to have some dips and corrections along the way. But for now, it does seem like the worst, at least in the short to medium term, is over, as if VIX is coming down pretty hard right now. But yeah, just to keep in mind, always be careful. The VIX likely won't go down straight down. It'll probably go sideways, maybe have another volatility event before going down higher. So just keep that in mind, right? This was a great opportunity to buy the dip. Hopefully some of you bought the dip, but there's going to be more opportunities in the future, right? As the market naturally will come down every once in a while. So anyways, I'll update you guys in next week and see how this develops. Hopefully we do hold above. If we don't hold above, we likely will come down and at least retest. If we fail to hold the 50-day, we'll likely come down and test the midterm moving average. But right now, based on everything that I just went over in this video, it does seem like the probability of us going up higher and holding this Fibonacci level, that probability is a lot higher than us going down below. But we'll definitely have to update you next week and see how the price action develops, and we'll go on from there. Okay, thank you for watching this video. If you found it helpful, useful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate all your support. Thank you again, and have a great day.